Hi, everyone. This is Robert Kientz with GoldSilverPros.com, and I have a great guest today named Stuart Englert, who wrote a book called Rigged, Exposing the Largest Financial Fraud in History. And he's joining us today to talk about that book and how he came about wanting to write it. Stuart, how are you today?
I'm fine, Robert, and thanks for the opportunity to be with you today and talk about my book and price suppression of gold and silver.
Yeah. So if you could start off by giving us a little bit of information on your background and then how you came about the topic of the gold and silver price suppression and why you wrote the book.
Sure. Well, I'm a trained journalist. I was in the newspaper magazine business for 30 years as a reporter, writer, editor. And I'm also a libertarian, and I've always been interested in, debt and money. And, I supported Ross Perot and Ron Paul when he ran on the libertarian ticket back in the 80s. And I came at it from that perspective. But in terms of the manipulation and my interest in that, I suppose it was back during the Great Recession 10 to 12 years ago when I saw the spot price of silver falling while retail premiums and prices were rising. Mm-hmm. And do you remember that? And
I do. In fact, we're having the same issue today, I believe, that the premiums for the physical.
Exactly. It didn't make any sense to me then, and it still doesn't make sense to me. And you're right, it's going on today. There's a divergence in the price. Mm-hmm. And that tells me there's something wrong with the market. There's something going on that I wanted to explain. And that's kind of how I arrived at this. I mean, I've been following GATA's website for an equal amount of time, 10 to 12 years. And I said, you know what? I need to write this book. I initially went to Chris Powell, who's Secretary Treasurer of GATA, and asked if he'd like to write it because I publish books. But I said, he said he didn't have time. Well, last fall I had some time, and I delved into GATA's research and documentation. And what I did was pulled out, I thought, the best excerpts from the documents and tried to put them together in something that the average person could explain. Yeah, I could understand, I should say.
Yeah, I think the book is very well done. It's a quick read, a great read for anybody who's wanting to understand how the metals markets work and how the system really functions in real life versus what we're told how it functions. And a lot of your research really aligns with research I did many years ago when I did an article series for this on Seeking Alpha regarding rigging of the precious metals prices. You mentioned GATA.org's research over the last 20 years documenting that conspiracy in the futures markets for the metals. Is there something in particular in that research that you found impacted you the most, or is there something that drove you to want to tell this story?
Well, there's a few documents that stand out, and even public testimonies. One that I keep coming back to that to me is just irrefutable is the obvious admission of price suppression that came from former Federal Reserve Chairman Alan Greenspan in 1998. Remember that? When he went before a congressional committee and said, and here's a quote, "Central banks stand ready to lease gold in increasing quantities should prices rise." Well, what is that? That's an indisputable admission of market intervention aimed at price suppression. And how can anyone dispute that? I mean, he used his convoluted language to express that, and I guess most people's eyes just gloss over when he says something like that. But even today, that's irrefutable. I mean, it's on the public record. And I keep coming back to that. I also discovered some documentation of my own that actually GATA put one of the documents in their archives. And that's a declassified CIA memo from 1970, okay? And it's titled Special Drawing Rights, Paper Gold in Action. And the document reveals how the International Monetary Fund's special drawing rights, or SDRs as they're called, were created as a paper substitute for physical gold in foreign exchange. And SDRs, as you know, are a type of global currency exchanged among central banks. You know, individuals and corporations aren't using them. It's just traded back and forth among the central banks. I'll read an excerpt, if you don't mind, from the book. To be sure, the dollar holdings of foreign central banks can now be used to purchase SDRs, where formerly the only alternative to holding dollars was to demand gold from the United States and risk a monetary crisis. Mm-hmm. A monetary crisis? Why would that risk a monetary crisis? Well, back in the 60s and 70s, the United States was running its huge deficits and trade imbalances, and other nations were losing confidence in the dollar. So they were demanding gold in exchange. And, and U.S. gold stocks declined by some 12,000 tons in the 60s and 70s. Well, that could have been the monetary crisis the CIA was predicting, because the United States gold stocks were dwindling. And that's why President Nixon ended the international gold standard, because the United States would have run out of gold and no longer would have had the world's reserve currency. Yeah. And I suppose collectively, all the documents that are cited in the book reveal a concerted and systematic effort to deceive financial markets, Americans in general, and investors. And the manipulators want us to believe that the dollar is as good as gold and silver, but it's not. If it were, their prices wouldn't have to be manipulated and suppressed.
Right. So I think you explained some of the major players in the system and why they would want to protect the system. And I agree with you on the point about Nixon taking us off the gold standard. Now here we sit in this pure fiat system. When people discover what's going on, do you think it'll cause a rush back into gold for a lack of faith in the dollar by the average American? Or do you think that this is going to continue, this scheme is going to continue on for some time?
I think the more people that awaken to market rigging, the less likely the fraud can continue. And that's one of the purposes of my book, to educate people about the monetary system and what's going on. You know, if only a few billionaires exchanged their dollars for gold, the entire imaginary paper metal scheme would fall apart. Most Americans can't afford an ounce of gold at $1,700, but they can, at current prices at least, purchase a few ounces of silver, you know. And I think really silver is the red herring or the Achilles heel of this whole scheme. The central banks hold a lot of gold, right, that they can manipulate with and dump into the market, and they have. But they don't have that much silver. They don't have the large stockpiles. So, and I think that's why, you know, Ted Butler, silver analyst, claims that the silver market is more rigged than any other market in the world, you know?
Yeah, no, silver prices are trading below the cost of mine them out of the ground. I think we're at something like $14 and something yesterday. The average primary silver miner gets it out of the ground for about $16.50. And in addition to that, most silver ever mined is not mined by the primary silver miners. It's a byproduct of other mines such as copper, lead, and zinc.
That's right.
So whenever the demand for copper, lead, and zinc falls, the production of silver is going to fall along with it, because those copper, lead, and zinc mines aren't going to mine additional copper, lead, and zinc just to get the silver. So what we have is a situation here where we're having all-time demand for silver for industry, where we're having falling supplies of silver. And what doesn't make any sense is why that silver price is not rising. And I think when you go and look at the futures markets, there's a lot of evidence there to show that the paper derivative trading on the COMEX in particular is basically pointing to the fact that there are a large number of institutional shorts. The argument for the institutional shorts has always been that it's hedging the price of silver for the producers. But in my research, in the Commitment of Traders reports, the hedgers do their own I'm sorry, the producers of silver do their own hedging, of silver and gold do their own hedging.
Yeah.
So the positions that you see shorting silver are outside of that legitimate hedging need in the market and really exist for some other reason. And no one really knows what that reason are, but we do know there are several big players in that market that are suppressing that price. Again, it's completely unnatural. And in a situation where you have falling qualities of new silver discoveries, falling quantity of silver production, because silver is a byproduct and you have this deflationary economy going on, and you have increasing demand for all these green applications for silver, for medical applications for silver, for electric cars, for silver, you still have this price that's below the cost of mining. It just doesn't make sense. So I think even if you don't understand the history of the manipulation, if you just look at the market dynamics, there has to be some question in your mind as to what the heck is going on. I don't know if you had comments about that as well.
Well, precisely. I mean, I ask it every day. Every time I look at the spot price at $14 or $15 for an ounce of silver, and yet I go onto the retail websites, APMEX or SD Bullion, and I've got to pay $24 or $25 for an ounce of silver, and some of the older years, $30 for a 2008, 2009 American Eagle. Yeah. There's a huge disparity there. And why is that? Why is there such a difference in price from what spot price, which I take it is set in London, to what retailers are paying for an ounce of silver?
Yeah, and not only do we have those premiums in silver, and the premiums in silver you mentioned, by the way, are almost a doubling of the price in the physical market for silver as to what you see quoted for the spot price. If that's not an indication that derivative market is completely mispriced silver, I don't know what is, and I don't know what other piece of evidence people would want.
I agree with you.
Real-time economics is telling you what the value of silver is, and the spot price is not the correct value. We also see these stiff premiums in gold, kind of shifting the conversation back to gold for a moment. We're seeing 11, 12, 13, 14% premiums on physical gold. Part of that is due to the supply chain sort of shutting down due to the COVID crisis, but this is just exacerbating a shortage in gold that we were seeing leading up to that. I don't know what your thoughts are on where the current gold prices are, and whether you think that the truth is being told in the market about gold, and that the spot price of gold now is just an anachronism and is not the real value.
Well, I'm not a market analyst. I don't follow the charts regularly, but I do look at the spot price and the futures price and the retail price. And there's a difference between all of them. Yeah. And that tells me you don't have a true market there.
Right.
And to me, the only true market is what someone is willing to pay for an ounce of gold or silver. It's not what somebody's willing to pay for a paper ounce or a contract for an ounce in the future. It's what they're willing to pay today. And to me, that's the truth in price discovery.
Yeah, when you go to the supermarket, you don't pay for a paper contract for milk. You actually buy milk and pay cash for milk.
That's how I view the metals market, if you will. Yeah. A loaf of bread or a pound of bacon. Those are traded in futures too, but the real price is what somebody's paying at Kroger, right, or Walmart for their food.
I agree. So many people, such as myself, think the manipulation of the gold market's eventually going to end. Do you believe this is so? And if so, are we nearing that point, or do you think there's something else that has to happen next? In your opinion?
Yeah, I'm not a prognosticator. I can't look into the future. I don't make grand projections. But I've read enough history of the monetary system to know that no paper fiat currency lasts forever. And I think that's the case with the dollar. The dollar's had a great run as the world's reserve currency, as you well know. But I believe that all fiat paper currencies, including the dollar, will eventually go the way of the dodo and the dinosaur. It's going to end. And I think that's what we're seeing now. We're in this transition period. And, when it will end, I don't know. But I will say that it's going to end. And I don't know if that's in my lifetime. But I agree with you. The fraud will ultimately end. And that's going to be when enough people and nations lose confidence in the dollar and the corrupt financial system we have.
Yeah, I think I agree with you. We're in that discovery period of people looking at the current financial system and going and saying what's going on, because we had the crisis in 2008 that we said we were going to paper over, we're going to issue debt and bail out all these, auto manufacturers and the mortgage industry. And we're going to print all this money, and trillions have been printed. And again, we had COVID this year, and it was the last count, 12 to 15 trillion dollars by the world's central banks in easing. And yet we're still having the same economic troubles as we had 10 years ago. So obviously the prescription that the central banks have for fixing this problem haven't worked. So I think people are starting to wake up to that fact and saying, okay, what alternatives are there that we can have to protect ourselves? And that should we be looking at in our nation's future to protect the nation, the legitimacy of the economy of the United States. I wanted to ask you about your book now that it's out. How's it doing, and what sort of feedback are you getting?
Well, I wrote this just because the story needed to be written, but I didn't think I would sell a lot of these books, but the sales and the interest has already exceeded my expectations. In addition to sales across the United States from coast to coast, the book has gained an international audience, which surprised me. I mean, I had no clue that someone in Australia or Canada, France, Germany, India, Japan would be interested in reading my book. But that's happening. In fact, recent sales have been higher overseas than the United States.
Wow.
So what does that say about it? It says a couple things that, some people abroad are curious about what's going on, what's happened in the past and where we're headed. But it also tells me some Americans are still not awake to the fact that the dollar will not be around forever, and that it's losing purchasing power. Since 1971, the US dollar has lost, 98% of its purchasing power against gold. Most people don't know that. Most people don't know that an ounce of gold is selling for $1,700 to $1,800. But to say that the book is doing well, and I'm pleasantly surprised with it, and the feedback's been pretty good. I've had a few naysayers that claim that the whole manipulation scheme is noise or a conspiracy theory or a myth. But for the most people that read the book, they like it. It's concise. It's to the point. It's relatively easy to read, even for a novelist. So again, I can't believe that I'm being invited on a podcast to talk about this subject. I had no idea this would happen, Robert. So,
but I think this is very timely, and I'm glad you did it. We were speaking before the interview about timing and putting this into a book. I wrote articles about this 8 or 9 years ago and published them online, and they did receive good feedback. But there's a difference between writing articles and putting this in a book format that's going to sell internationally. I think it gives a little bit more gravity to the subject, and I'm really happy that you've done that. One more comment from me before we wrap up the interview, Stuart. You mentioned earlier in the interview that it's hard for the average everyday American to buy an ounce of gold because it's trading, 16 to 1700, almost near its all-time highs in 2011 after the financial crisis of 1900. And I think that speaks well to gold, because gold, it's holding its value against other things. It's holding it better against the stock market, better against bonds, better against the dollar. And in my experience, I used to be licensed in several financial areas years and years ago. In my experience in the financial world, when you see an asset pricing rising, the price of it rising so strongly over time, you tend to gravitate towards that asset as a sign of strength. And yet I think people are doing the exact opposite with gold. They're saying it's unattainable for me in everyday life, so I'm just going to stick with these other financial assets. And it's really, it's unfortunate that people are making that choice. I think when you see the strength of gold, that's really telling you where the value is in the system. It's not in the dollar. It's not in bonds. It's not in a lot of these derivatives. It's in the metal, which again is proving its worth, as it has for 5,000 years. So last question I have for you, what's next from you? Do you expect to follow up with some articles, or what are you going to do after the book?
That's a good question. And I ask that one of myself daily. Right now, I'm in the throes of, promoting this book and trying to get as many readers as possible. But I perceive that in the future, I'll have to do a follow-up, or at least update the book, particularly if the manipulation scheme comes to an end. But in the meantime, I'll just continue to follow this unfolding story, and I'll look for more evidence to either prove or disprove the conclusions that I drew in the book Rigged.
Well, we definitely appreciate it. We're going to follow the story on our website. We'd love to have you back on sometime, Stuart. Really appreciate you coming on. Once again, Stuart wrote the book Rigged, Exposing the Largest Financial Fraud in History. You can find it on Amazon and other popular outlets. Stuart, thank you so much for your time today.
Thanks for the invitation, Robert. I really appreciate it.
You're welcome.